I'm Will Clark of Mercia. I'm a fund principal within the venture business. The venture business is 224 million funds under management. We've got a portfolio of approaching 200 companies now within venture, and it's been a particularly active year. We've invested just over 30 million in companies in the regions, so not just in the north, but up in Scotland, the northeast, the Northern Powerhouse region, and also the Midlands. So we've got a broad mandate in terms of what we're looking for. So we're looking for tech businesses and non-tech. We can provide startup capital and scale-up capital. So we are very much looking forward to finding sort of businesses in the regions which are managed by ambitious, talented founders and teams who've got a real crystal clear vision in terms of how they're going to make money for themselves, but also for Mercia. We've got a very sort of eclectic mix of talent at Mercia. We've got quite a lot of accountants who've got corporate finance experience. We've recruited quite a few scientists who've got PhD studies. We've even got a couple of investment managers who've run their own businesses. And indeed, the last hire that we made in the business is an American guy who's a researcher, but he had a period actually as an analyst working in the White House. So a fairly eclectic mix. So we've currently got about 80 million of capital available for investment. That excludes any further allocations that we might receive from our existing clients in terms of those mandates. In terms of where we find those businesses, there are effectively sort of 5 main sources for us. Clearly, local advisors is a key area for us. That's sort of accountants, corporate financiers, lawyers. We've got very strong links to local universities and accelerators across the regions, be it in the Midlands or up further north. And I guess increasingly we're seeing more deal flow coming from our network of non-execs. It's a very good sort of source of deal flow and from that sort of angel community as well. Increasingly we're doing more research and more outbound activity, particularly in terms of finding deep text of opportunities. And then of course we've got some very good advocates for the Mercia brand within our portfolio, so we're getting some very interesting referrals from the existing portfolio too. In terms of fund performance, I guess the one to call out is in terms of the Rising Stars growth funds, a collection of funds that started back in 2003. It was collectively a £19 million allocation to try and find the very best tech businesses that were emerging in the northwest of England. And I guess there's one real sort of standout performer within that fund, and that's a business called Blue Prism based in Newton-le-Willows, famous for robotic process automation. That business floated on the London Stock Exchange back in 2016 and has actually delivered a 95 times return on the initial investment of 900k that was made in 2 tranches many years ago. So the 80 million that we've got to invest has still got a good number of years to realise. Taking the Northern Powerhouse investment fund as an example, we've got 3 years still remaining in terms of finding new investments, and then a further 5 years to realise those investments. So we've got some very interesting sort of businesses which range from 3D post-production sort of businesses to services businesses which are maybe a little bit maturer and where hopefully the exit will come sooner rather than later. So we've got some very sort of distinct sort of offerings within Mercia in terms of venture, private equity and debt. There's great team working sort of across Mercia. I know everybody says they've got great people, so it's not just the quality of the people, but I think more importantly how those people work together and share experiences and share contacts, because we're very privileged in terms of having a strong local network of officers that works for each other. So I think that's a really important thing to bear in mind in terms of thinking of Mercia.
Wayne Thomas, I run Mercia's private equity business. The current fund is 45 million. We're targeting 1 to 5 million, and the 4 deals we've done from the fund so far have been 3, 4, 5 in terms of investment size. The fund has the ability to go to 10. We have a sidecar fund that we can deploy, so one of the investors has put extra money into the pot effectively. So in the north of England, we can get up to £10 million, and we're hoping to extend that to across the rest of the UK. In terms of the investments we do, as I say, typically 1 to 5. So we're relatively small businesses. We're very much SME focused, very much management team focused. So similar to a lot of the other Mercia business, it starts with the management teams, high growth, entrepreneurial, ambitious management teams that have the ability to grow. To be honest, in our bit of the Mercia business, we're really looking for businesses that have the ability to grow without us getting that much involved. So it's about the team and the growth story, rather than necessarily the product or the market. There are certain markets and sectors we won't do, so property, for example, and retail. The current fund is 2 years old, so we've done 4 investments. It's a 10-year limited partnership fund, so in terms of returns on that fund, we're probably looking at another 3 or 4 years before we get to returns. If the first fund is anything to go by, then that first fund did 14 investments across the 10-year fund. We're in year 9 of that fund. We're sitting at a DPI of about 167 at the moment. Investor IRR of about 20%. That's based on realising about half the portfolio. So far, portfolio returns have been anywhere from 2 times the money to 7 times the money. So that's the sort of range we would expect investors to get. Yeah, absolutely. I mean, obviously, the ambition of Mercia is to grow funds under management quite aggressively over the next 3, 4, 5 years. Part of that will definitely be the private equity business. But to be fair to the clients we've got at the moment, we need to invest their money first before we start to look to raise more money. I think we'll probably start to look to fundraise this time next year onwards, I would think, based on current investment rates. I think it's probably the breadth of offering that Mercia have. And there are lots of PE businesses, as everybody knows in this room. There are lots of venture businesses, but a business that can span £20,000, £50,000 into a startup through to £5 million into a buyout, they are few and far between. So I think that breadth of offering is pretty much unique across the business. And also the office network. I mean, there are, again, lots of models, whether it's London-centric and you travel on the train, whether it's Scottish-centric and you travel south. Mercia's footprint, I think, is truly national, which, again, is not unique, but is uncommon in the industry.
My name is Paul Taberner. I'm the head of the debt funds that we manage within Mercia. We manage a number of different debt funds for third-party clients predominantly. So these are institutional investors, public sector investors that engage us to invest money into SMEs on their behalf, to lend money into the SME community on their behalf, both for return and for other non-financial objectives, particularly in the public sector. We're managing roughly 130 million of loan funds at the moment. Some of those are in what we call the legacy phase, so we've ceased investing and we're collecting the residual loans and returning funds to the client, but we're actively investing circa 90 million at the moment. The funds are very much generalist funds operating in the debt market. It's very difficult to operate in a very narrow sector given the nature of the clients that we have. So they're very much generalist, focusing on the SME community, typically making loans available between 100,000 and up to £1 million is the sort of typical range. Funds that we invest operate nationally, although given our office presence and networks, there is a focus on the north of England, but we do invest nationally. The funds are invested for financial return, and a fund that we've just nearing the end of has delivered returns of 107% overall to the client, which, given that we're operating what we call gap funds, so these are funds, public sector funds, aimed at those businesses that can't attract traditional funding from mainstream lenders, then the client was very happy with that level of return. The debt funds that we manage are third-party funds, so we're paid a fee by the client to manage those funds on their behalf, and those fees contribute to the sort of net operating, or reduce the net operating costs of the business, which obviously complements the activities of overall. We often see inquiries from companies that are looking to raise looking to raise debt alongside equity, and we've done a number of investments whereby it's been a joint investment between one of the debt funds and one of our equity funds. And it's being able to offer a bespoke package of debt of funding streams to an individual company is seen as very positive by the market. When an advisor or an intermediary approaches a funder, for us being able to offer a complete range of products or a complete range of funding solutions is fairly unique in the market. There are very few people that can deliver that, and we often fund businesses via our equity funding streams, which then go on to become viable businesses, very profitable businesses that can support further debt raising without the need to go back for equity.
My name is Mark Payton, Chief Executive of Mercia Asset Management. Mercia has changed its name from Mercia Technologies to Mercia Asset Management, but our strategy remains the same, that of managing third-party funds and then selectively bringing those across and investing from our balance sheet. Mercia considers AUM, assets under management, to comprise of third-party capital, funds under management, as well as our own balance sheet. So third-party capital, those funds under management, FUM, 380 million this year, down from 400 million net last year. But overall, assets under management, just over £500 million. And the reason why there's that net movement from 400 to 380 is that we've been distributing capital very successfully back to our investors in those funds. And over our journey so far, we've distributed back £174 million back to investors in the funds. Of course, as we go forwards, we would expect to raise more funds under management and for that number to go up. The key strategic priorities for Mercia going forwards are to double assets under management over the next 2 to 3 years. So we're £500 million today, to take that up to £1 billion. To move the group to a sustainable and profitable trading position before excluding fair value movements and realisations. And therefore take the group to a position where the balance sheet is evergreening, so making realisations above and beyond the investments it's making, as well as a sustainable level of funds under management too. And of course, all of that coupled by the fact that we invest on a regional basis. Today, we are 4th most active investor nationally, 2nd on a regional basis. Our intention in the next 2 to 3 years is to be the 1st most active investor on a regional basis. So I'm often asked about our direct investments and whether there is a preferred one. I have 2 children and I never say which one is my preferred child. But what I can say is that we've got 21 direct investments. And within our top 10 direct investments, 8 of those this year have benefited from a fair value movement gain, of which most of that has been driven by syndication. So other investors putting prices on those assets. So in general, the assets are performing very, very well. There are ones of note that's worth pointing out, such as Endreams, our VR developer, Oxford Genetics, a synthetic biology play, in Technica, malicious bot detection play, and VoxPopMe as well. So there are notable businesses coming through that. But below those top 10, there's some very exciting businesses that are coming up as well. So this time next year, I would be expecting to talk about new businesses coming into those top 10 as well. Progress continues at a pace at Mercia. This year, we supported over 140 businesses. So we backed over 140 businesses, of which 96% of those were in the UK region, so outside of London. And that's up from 90 the year before. We've invested £75 million across the group this year, and that is up from just over 40 million a year ago. And we expect that pace to continue going forwards. We expect to be supporting more businesses across the asset classes we manage, so across venture, which is over half of the capital we deploy, private equity and debt. Our level of capital deployment will also increase as we go forwards too. And of course, we're moving towards this profitable position for the business, and we expect to make substantial progress in that in the coming 12 months.